I'm Megan McConville and I'm a senior accountant at Locmans Advisors. I wanted to talk about accelerated depreciation because these rules are quite new and they're going to affect a lot more businesses than the previous simplified depreciation rules. So the idea behind the accelerated depreciation is to encourage businesses spending, which will help boost the economy, and also to provide businesses with a tax deduction to help them out recover after COVID. So the depreciation rules depend on whether your business makes an aggregated turnover of less than 10 million or between 10 million and $500. So when I say aggregated turnover, I mean what your group makes altogether, not just the single business. So businesses which have an aggregated turnover of less than $10 million can instantly write off assets which cost less than $150,000. If the asset costs more than $150,000, you instead add it to your small business asset pool. With the small business asset pool, you get a deduction of 57.5% of the asset when it's in the first year that it's ready to use, which is an increase of what it used to be, which was 15% in that first year. And if the total value of the business pool is less than $150,000, it can also be immediately written off. For businesses with an aggregated turnover of between $10 million and $500 million, they also get the instant asset write-off threshold of $150,000, which means they can instantly write off those assets. For assets over the threshold, the tax deduction for the first year of the asset will be 50% of the total cost of the asset, plus the normal depreciation for the balance of the asset. There are some exclusions with the accelerated depreciation. For example, passenger vehicles, they still have the car limit of $53,760 plus GST, but no, it's passenger vehicles, so it doesn't include utility vehicles or vans, more special purpose vehicles. Other exclusions are certain in-house softwares, as well as capital works, which means buildings or building improvements. You can also choose not to apply the depreciation rules if you'd prefer to receive that tax deduction over a number of years instead of in that first year the asset was held. So this applies to assets which were purchased and ready to use between the 12th of March 2020 and 30 June 2021. If you'd like to know more or go through a few scenarios, please feel free to get in touch with us at Locmans Advisors and we'll be able to help you out.